Hello and welcome to another update on the DXY, the US dollar index. On this chart, obviously we're looking at the chart from an Elliott Wave point of view. Current idea is that the market is likely in this C wave to the downside, and in this C wave we are currently tracking a 5-wave move. So for those of you who are not so familiar with Elliott Wave, please consider that most of this decline is likely done. So I've just zoomed out. We're on the daily time frame, and the idea is that we are likely here in a correction labeled wave 4. So the idea is a third wave formed at the top in 2022, and this correction has been unfolding since the 2022 high. So we have an A wave down, a B wave up, and this is a C wave down, targeting $97.51 to $90.43. So this is what I am tracking here. This ABC structure to the downside. The C wave, as I said, should be a 5-wave move, and they often have the same length, the A wave and the C wave. And in this case here, the C wave could be nearly done. It has not quite reached yet the blue zone, which is why I'm in favor of another low. But I think in the near term, after one more low or maybe already directly, we could very soon complete this correction because most of this decline is likely done. So I would still say that one more low is ideal. Before then, a larger rally could unfold as part of this 5th wave to the upside. But as I said, I have to go with probabilities. And I'd say the high probability element anyway of that correction is done. But when I'm looking at this correction as a whole that started in 2022, well, as I said, the idea would be that, the idea would be that we are moving down here in this C wave and should get to the 100% extension because that's just a very, very common target. But again, most of the decline is likely done. It's taken quite some time. Now, the market is broken out of the price channel. I mean, that could be considered potentially a bullish signal. So this price channel has started to develop in February, March time. It's just, we have a few touch points there. It's not the most reliable one, right? But not very well defined, but still it is a price channel I can identify. And at the moment, as I said, at the moment we are trying to turn around here. The market is broken out of this channel, but it's still below resistance. Now I use I place more emphasis on the resistance area. And this is between, the Fibonacci resistance, The channels, they are not so reliable. So when we look at these Fibonacci resistances, then you can see that it's between $100.65 and $103.73. And it's still holding, and the market has even reacted here to the area around the 38.2 retracement. And the idea is this could be a wave 4 bounce. It's also just in 3 waves to the upside so far, that move. Now, the only way, in my view, how it could really grind higher is if this is some kind of a diagonal pattern, but it counts really well as a wave 4 correction. We also have a possible micro 5-wave move down. So from that point of view, I am tracking here for lower prices as long as the market holds below the 12th of May high at $102. So I'm considering here further downside. But I have to say, if we break above the Monday high, then we could still extend a little higher in that wave 4. But then I would start to think at some point that maybe something is morphing. Maybe the wave 4 already bottomed because this is already compared to the wave 2. It's already quite a healthy wave 4. So we don't necessarily need to go much higher. So that is how I'm tracking this at the moment. Which means over the next 1 or 2 weeks, I would at the moment expect lower prices, at least as long as we stay below the Monday high. Any break above would potentially lead to a reconsideration of the wave pattern, and we might start to track higher prices. I already have listed there the alternative wave 4 low, but it could be then that we say, okay, maybe this is a wave 1. We have a wave 2. This could be a wave 3. This could be a wave 4, and then one more high. that's why I say I might then reconsider, because one more high would give us a potential 5-wave move up from an Elliott Wave point of view. And the 5-wave move from an Elliott Wave point of view typically tells us that the trend is shifting. Yeah, so we would then see it shift from a local downtrend to an uptrend potentially. That would need to be confirmed then by the next pullback, but overall it starts to shift probabilities. Yeah. So that's the update on the DXY. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. Yeah, and if you're interested in additional updates, make sure to subscribe to the channel. Thanks so much. Bye-bye.